Hey there, this is Sean Mathis, and today is Thursday, November 29th, 2018, and this is the first journal entry of an adventure in oil futures trading. So, in full disclosure, this is actually November 30th. What happened? I recorded the entire episode yesterday, not the episode, but my entire journal, and the audio was garbage. I had a really bad audio problem. So now what I'm going to hopefully do is try to go back and recreate that so that I have something that you can actually listen to, because nothing is worse than bad audio. So my hope is that I can do that clearly, because when you're not on the same day, it's a little harder to do it in retrospect and to try to put yourself in the mind frame of what you were thinking at the time. But I was also very tired yesterday when I finally got around to this, because I was messing with microphones and trying to get everything set up, since this is fairly new to me, but you don't need to know all that. And I trade oil futures, and this is my personal journey to become the best oil trader I can be. Little disclaimer: derivatives trading is not suitable for all investors. Past performance is not indicative of future results. You probably have to be a little crazy to trade oil futures. The risk of loss is high, but so is the potential reward. So this is my personal experience. I'm still trading on demo, which means not using real money. I have traded real money in the past, but I've taken a long break. So I'm getting back to kind of solidifying my method and making sure that my edge is in good shape before I switch to real money. How long is that going to be? I don't know. We'll see. That's why this is a journey. That's why this is the unknown, the great unknown. But I'm going to be talking about the oil market in general, the general context of how I see the market, which is always based on price action and auction market theory, failures of price, things like that, zone trading. But more importantly, I'm going to be talking about the specific trades that I'm taking every single day. And why am I making these videos? For accountability. I believe that if I put out what I'm doing in the world, that will hold me accountable to what I'm doing. That will force me to execute my plan, hopefully, correctly, stick to my plan, and it will, in the long run, increase my likelihood of success. Well, what is success? What does that mean? Does that mean making a lot of money? No, not necessarily. That means I'm enjoying what I'm doing. I mean, let's face it, this is trading, so it's hard to be successful if you're not making money. So yes, to be profitable is my goal. I want to be profitable. I want to do well. Human beings want recognition. Anyone says that's not true, I think they're selling you something, probably. We all want to be loved. We all want to love. And being recognized feels good. It's not necessarily important about what people think of you, but recognition and giving back is a big part of life. Contribution to your community, your family, whatever that means to you. If anybody has any comments or questions, not that I'm qualified to answer questions by any means, but I believe the open exchange of ideas is extremely beneficial to everybody. And I hope that by verbalizing how I see the market, it will help me clarify my understanding, and I will become a better trader through that process. Possibly somebody else will also get some value out of that, which is a win-win for everybody. And I am not a guru, so I hope nobody takes any of this as trading advice, because it certainly shouldn't be looked at that way. So I will continue to document this journey from demo to real money accounts to as far as I am able to take it. What does that mean? I don't know. We'll see. So let's go to, first of all, what I always do on my 15-minute chart. And we can't look at 29 because it hadn't happened yet. So this is the 28th. And that's a 24-hour session chart. I prefer to look at a pit session only because it gives me a little clearer picture, and that's where the majority of the volume is anyway. So I think that's especially when I'm just trying to get a context. So you can see that this is extremely balanced. 1, 2, 3, 4, 5 now. And so as the market was 4 days of, very, very large balance. So sometimes I'll even take a look at an even longer time frame chart. So this is a daily. So oil is just gone, it's just tanked and tanked and tanked. And now what we're looking at is being stuck in this balance area right here. So that's how I read the market as far as what is likely to happen. So the 28th here, that's yesterday from this perspective. We were here. Value, still trading in value. So my expectation on that morning, I start trading at 7. So you can see that we moved outside of this value area. So now my expectation is in the morning that we are possibly going to break lower because we're opening below that area. 6. So here we are. Market opens back in value. But I'm still conscious of that we've been down below. Prices rejecting here, these lower prices, coming back up. So as of market open, my expectation now is that we're between yesterday's volume area high and volume area low. So we are likely to test these edges of value. And that's how I'm going to be trading from edges of value back. Mean reversion trades. Until I see or have other information. So my first trade, let's see, get back here. And unfortunately I have to go back and do this in retrospect because I don't have it open anymore. And this is my trade, it's what we call, this is my trade analyzer. So this shows trades for the day. So my first trade was at 7:17. 7:17. So I move off of this. I'm looking for setups generally on my 3-minute chart. So market opens here. This is what I'm looking at. We're looking at testing these highs here. Price is working its way up, failing back down. So as of 7:17, my first trade is a short trade. As you can see, every trade for the day was short. $7.17 here. Yeah, this isn't so easy to do, is it? So my expectation here is that we have this failure bar here. Price moves up against here. I'm expecting price to break $7.17. Oh, this was a 1-minute trade. Oh, I'm sorry. See, this is going to be harder to do because I've already forgotten. So this bar right here, we test above this bar high, come back down. My expectation after this failure of this high tick here, is that where's price likely to go from where this imbalance move up came. So that was right here. Taking that trade. So not real happy with how I managed this trade. I entered this on the dome and I had a 10-tick target, which is normally not what I do. So it was, time and trade was only like 1 minute, over 1 minute. And it was great that I took a 10-tick profit, but it wasn't my intention. That wasn't my plan. My plan was to manage it a little more carefully. So in retrospect, also, this probably wasn't that good of a trade because I could have anticipated if I didn't want, I knew that price would react here, or it was likely to react here. So entering here at 51.08. It took it off at 58.98. So what I did, we had a reaction of price here, and that's when price came back up. But what I did is at 7.19, I re-entered again because it wasn't part of the plan. I thought I still wanted to be short, and so I got back in here. And what happened is price ended up ripping right back up and taking me out for this full loss, full 9-tick loss. So not managed that well. 742 was my next trade. And this was another trade. And let's move off of because when I'm trying to identify setups, it's generally not on the 1 minute. I'm either managing trades on the 1 minute and or Bookmap, or both actually, just to manage the trades. But setups come from my 3 minute or my 15. So 742, we can see this guy here. This was the setup. This bar high, this high tick again. So you can see in this zone, price moves up again. Here, price high ticks this zone area. That's what I call this kind of balance area. So increase in volume, but we don't find buyers above this area really. So as soon as price comes back down, 737, I probably went to this area to find a suitable entry. 742 is where I entered here. So unfortunately, what happened? My initial stop was right here above this bar high. And this is a common thing that I tend to do in mismanaged trades, is rather than leaving my initial stop, what I will do is on a push of like a bar low here, I will de-risk my trade. So I thought, and I said, okay, well, why don't I just put it back behind this bar high? Well, unfortunately, you can see what happened in that case. We had this one more push. See, this is where I entered. Entered here. Price came back up. I had de-risked on the break of this push below this. Price came out here. Took me out at 52 for a 4-tick loss, rather than leaving my initial stop where it should have been above this bar high and letting the trade play out. And my expectation, I entered at 48, was to get 20 ticks on here where this move initially came from, which even down here, but I would at least expect a reaction in this area. So that was my plan, and you can see if I had left my initial stop without moving it and let the trade play out, it would have been a great winner rather than a 4-tick loser. And that has been for a very long time a consistent issue for me, trying not to lose. That's what my mentor I used to work with always told me, you're trying not to lose, and that doesn't make sense. And I still struggle with that because I say, well, what is the line between, as an investor, when you're trading, it's very important to maintain capital. Because if you don't have capital, what do they say? It's an old adage, or it's just like something you hear on all the time. Buffett's number one rule is never lose money. Number 2 is see rule number 1, something cliche like that. But it's true if you don't have capital. But also, if you don't have proper risk, then another one that's so silly, people say you never go broke not taking a loss. And yes, you do. Because if trading costs, if you just continue to take break-even trades, it's going to eat you alive, and pretty soon you've lost a bunch of money. So that's not true. People that are good traders, I believe, don't say those kind of things because they don't know what they're talking about. So next trade, we'll get on to the last one. 907 I took was a nice winner. 907. Well, actually, we're going to go back to my 3. 907, this was another 907 was another short trade based on this bar, this failure of price again. And you can see we had an increase in volume, but still did not find any support from buyers here. So after this closed, $907 on Bookmap, we can see this. I think I took this trade because I was pretty confident based on what I was seeing on the order flow over there. So this setup bar, this breach of the old highs, 904. Yeah, that's just this bar high here. So we came up here and did not, you can see this is actually a divergence as well. Pushed here. When we pushed and broke that high, lower volume, but we didn't get much of a push. So showing that buyers are weak. So at that point I wanted to, this is where I sold this. I sold this here. Now where do I expect that? And this is somewhat, you know, price is continuing. You're saying, well, it's kind of looks like it's trending. To me, this looked like this was value. I'm trading the edges of value here. And we're still in this value here. 907. So right in here. And, you know, you can see this is where we got a large imbalance move. That was before that happened. So this is where I took this trade here. And you can say, well, doesn't that seem risky? But it didn't seem risky to me because as I was seeing this all was in value. This was a balance zone here. Came from this large imbalance into here, back into this zone. Did I get lucky? Well, maybe you could say that too. So I took the trade here short. This is where I got my expectation again. Where is price likely to go? Here, where the push comes from. So I took this off above these bar highs kind of here at 42. That was a nice 20 ticks, was more than good enough for me. So here we pushed up again. This tested this area after my entry. This here at 913. This guy here. And this is where I identified that zone where this push came from. And that's right in here. So you could have said, you know, 940, 938-ish, that area. I was happy with 20. I took 20 off there. And then back up to my entry. So I'm glad you know, it's good to take the good wins. 20 ticks is a very nice win. So that's how I saw it. That's how I saw the market yesterday. I felt that my reads were pretty good. I was reading the market fairly solid, and you can see later on that day we went, and shortly after that trade we had an imbalance move up to push above this. This was the value. See, this was yesterday was the value area high was right here. So this was riding that value area high here. Value area low is right here. Right exactly where that zone is. So this was trading. It was really nicely trading around in this. See, look at that zone. That's what I was trading. And then right here as well. And I didn't get another trade, but this was nice too. You know, you could see that this rejected. And I did talk about that trade because I did like it. And unfortunately, I did not take it. Where was price likely to go after it broke through this? See this imbalance here. This is you extend this zone here. The zone extended all the way through here. And this is very subtle here, because price breaks here, works its way down, tests this little failure here, tests down, and from there we get this breakout. So I liked the long here, 68, to push through these highs again. And you can see, I mean, it would have been a really nice, I think I'll look back on, I was trying to what would be good, and you can see where this order flow came in here. So my target on that trade, and that was about at 1049. I do apologize, this isn't nearly as clear as I've been yesterday, but like I said, I gotta redo this because it was just not good. So you can see this resting order flow. This is where I would have put my target ahead of these resting orders in the book here. Pulled back here. Pulled back here. Entry would have been here, 1043. That's this guy right here. Pulls back to this area where the push came from again. Now this is kind of a breakout, what people would say maybe is a breakout pullback trade, and then my target would have been to test this high here. And with this resting, you saw this resting order flow. Be better just to take it off there. So 98 was my target for that. Would have been a beautiful win. 70 to 98, that's almost 30 ticks. So would have been a really nice one. So that's it. Only 4 trades, which is, I don't really take a lot of trades. So I'm going to call it good. I know I apologize. That was a little scattered, and it would have been a little bit better if it had been a little more fresh in my mind. But that's it. Thank you. Have a great day.